Hello everyone, welcome back to the Tech Roundup podcast, brought to you by Northridge Partners, the tech investment bank with more than 20 years of experience working across the Asia-Pacific region. The firm has deep expertise in sectors like FinTech, which this month's podcast is all about, and also in B2B software, aerospace and defense tech and travel tech, and much more. Allow me to introduce myself. I'm Bill Bitcoin.
And I'm Penny Payment. For new listeners, a quick heads up. We're digital humans created by AI, not real humans like you. But we're here to bring you real insights.
Thanks for clarifying, Penny. Today we're diving into one of the fastest emerging markets in Southeast Asia, FinTech in the Philippines. It's really the FinTech Phoenix rising, wouldn't you say?
That's right. We're talking about a population that's young, digitally savvy, mobile first, and underbanked. It's where people power meets FinTech.
Yes, Penny. It's an amazing story of transformation. The Philippines, once dubbed the sick man of Asia, was stuck in survival mode from the 70s through the 90s, due to a colourful cocktail of political chaos, corruption and debt.
That's right, Bill. While its neighbors, the so-called Asian tigers, were booming economically, the Philippines lagged far behind. But even though the country was still considered an ugly duckling economically, deals still got done. As far back as the mid-90s, the principals of Northridge Partners were actively raising capital and leading M&A deals for clients in the Philippines. So it's certainly not our first rodeo there.
It's hard to imagine the country flipping so completely within 30 years. Now, it's one of Southeast Asia's most promising FinTech hubs.
Bill, it really is. This revolution is fueled by a young, mobile-first population and one of the world's highest smartphone penetration rates. With over 70% of adults previously unbanked, fintechs are really plugging critical gaps in digital payments, lending, and remittances.
Wow. And ironically, it's the long-standing culture of remittances that laid the groundwork for today's FinTech surge. Overseas Filipino workers sent home more than $38 billion in 2024, which is over 8% of GDP. And helping people move that money more cheaply and easily has propelled a digital payments boom.
Agreed. The fintech surge is undeniable, with 65 million digital wallet holders out of a population of 117 million people. GCash and Maya are clearly making their presences known across the consumer landscape.
GCash and Maya may well be local giants, but the quiet engine driving this fintech revival is actually business payments, not just consumer wallets. Did you know that these days Metro Manila's commerce now hums entirely on digital rails?
That's a great insight, Bill. Maya truly leads in merchant services, having processed over 1 trillion pesos. That's about 17.2 billion US dollars just last year. It also ranks as the country's top Visa acquiring platform.
We also have to mention PayMongo, which really deserves a starring role here. Started in 2019, it now has more than 12,000 businesses on its platform, mirroring the rapid market evolution.
Oh, and PayMongo's success was internationally validated when Stripe led its 12 million US dollar Series A. They're now pushing card acceptance and instant payment links to thousands of small business owners and Sari stores.
The competition among players like GCash, Maya, and PayMongo is fierce, but the overall pie keeps growing. Plus, here's the biggest punchline. We think several of the Philippine fintechs are maturing towards profitability.
That's right. Maya, for instance, achieved a net profit in Q1 2025, with revenues up 5-fold over the past 3 years. PayMongo's CEO says they are also targeting break-even by Q1 2026.
Let's transition to lending. There's a significant addressable market here, with 47 million Filipinos still unbanked. We think the high demand for alternative credit should mean that the ecosystem can be built for durable growth.
And investors are noticing. Recently, we've seen Cashalo and Salmon together raise over 150 million US dollars, with Cashalo locking in a 75 million US dollar loan facility to support its 5 million loans and its mission for financial inclusion.
Cashalo's data-driven approach clearly resonated with institutional investors who are seeking exposure to this region's credit transformation. Salmon also raised $88 million in growth funding.
And buy now, pay later, or BNPL, is growing fast in the Philippines as well. By the end of 2024, 28 million Filipinos were using BNPL, representing a 40% jump in just 1 year. That makes the Philippines boast the second highest BNPL penetration rate in Southeast Asia, only slightly behind Singapore. Given the GDP per capita difference, that really tells you how central this product is.
There are definite structural reasons why BNPL is so vibrant here. Low card penetration and expensive informal credit mean consumers are eager for frictionless financing at checkout.
Now, all of this hasn't happened in a vacuum. It's in large measure a result of the thoughtful regulatory environment put in place by the Bangko Sentral ng Pilipinas, the BSP, which has shown real foresight.
That's right, Penny. The BSP has issued liberal digital bank licenses, it has established a robust inclusion policy, and it has mapped out a defined digital payments roadmap. This framework has unlocked innovation and competitive lending rates.
The Philippines' success is even more impressive when you contrast it with the pace of development elsewhere across Southeast Asia, where FinTech funding has plunged over the last couple of years.
Yet the Philippines is defying gravity, raising $166 million in H1 2025, more than double the amount of funding raised in Indonesia, a far larger market. In fact, Indonesia, long considered the crown jewel, saw no equity deals above $10 million during that period.
Even more telling is that even when combined, Vietnam, Thailand, and Malaysia failed to match the Philippines' fintech funding total.
So, Penny, are we seeing a durable boom or a bubble? The structural drivers, mobile usage, tech-savvy youth, supportive regulation, all seem to point to continued growth.
It looks durable, but challenges do exist, Bill. Later-stage capital raisings are relatively thin, and we haven't yet seen a wave of exits.
I think it's also worth noting that board-level depth in risk and governance is patchy, plus the very regulatory permissiveness that helps today could easily harden if consumer harm mounts.
Investors really need to price in the cost of professionalizing governance and risk systems early. But if, as speculated, KKR was to achieve an exit from Maya around the $2 billion valuation mark, things could really shift up a gear.
Agreed. The leap from laggard to leader is real, Penny. I know it sounds melodramatic, but the FinTech Phoenix has spread its wings, is breathing fire, and has totally left the sick man days behind. That's all the time we have for this edition of the Tech Roundup podcast. Penny, this was a fantastic dive into a dynamic yet under-recognized market. We think the Philippines' FinTech story has some way to play out, and it's not speculative. It's happening now, before our very eyes.
Thanks, Bill. And if you're listening, don't forget to subscribe to this channel and to our monthly newsletter, Tech Roundup. It's read by thousands of tech founders, CEOs, board members, and investors globally. See you in the next episode.
Until next time. And remember, we fake humans really rock.